Netflix set to acquire Warner Brother Discovery's studio and streaming assets. The company's announcing that they entered into a definitive agreement subject to regulatory approval. But will this deal be able to cross past the finish line? Here with a closer look is Reuters US entertainment business correspondent Don Chmielewski. Don, it is great to see you. So let's talk about this deal, Don. And it is a historic deal. Netflix buying Warner Brothers, $72 billion deal. $27.75 per Warner Discovery share. What do you think, Don? What does this mean for Netflix financially, strategically? Walk us through it.
Motivated this deal is really intriguing. Netflix has always been a company that built rather than bought. But this, listening to the investor call this morning, Netflix's CEO, Ted Sarandos, was talking about how this represented a singular opportunity. And here's what Netflix sees in the deal. It's an opportunity to tap into a library that Warner Brothers has built over 100 years with some of the best named franchises, entertainment franchises you can name. Harry Potter, their DC Comics superheroes like Batman and Superman. But beyond that, Netflix sees the opportunity to acquire businesses it doesn't currently have. It doesn't have a studio. It doesn't have a film distribution unit, a company that's designed to distribute films into movie theaters and promote them. And with Warner Brothers, it would acquire this new capability to really broadly distribute its films. And lastly, there's the HBO Max streaming service, which it sees as a potential complement to Netflix's own service. Some data that we've had access to shows that 75% of HBO Max subscribers also subscribe to Netflix. There's not a tremendous amount of overlap, but Netflix sees the opportunity to potentially grow HBO Max, which now reaches around 130 million subscribers. That's quite a bit smaller than Netflix.
So Netflix picks up the library, picks up some very sought after IP. We also have to ask, Don, how we think President Trump might feel about this, because the perception was, the thinking was, well, Paramount, Larry Ellison, had this relationship with Trump, and that gave them this edge. In fact, and you saw this, CNBC is reporting the Trump administration views Netflix Warner Brothers deal with heavy skepticism. I'm curious what you make of that, and if you think, Don, at the end of the day, this deal really gets done.
So I'm fairly sure that Netflix is not going to put $70.2 billion on the line, and a nearly $6 billion fee that will be paid if it can't close the deal. That's a tremendous sum of money without doing some sort of diligence here. I know it's hard to predict how the Trump administration will view any deal, and certainly Larry Ellison, whose son David Ellison leads Paramount, was seen as having kind of an inside edge given Larry Ellison's connection to the Trump administration and how the Trump administration has lauded David Ellison periodically in recent months. But I think, if the way that Netflix sees this deal, it doesn't, it will argue that, there may be concerns about consumer impacts. It'll argue that, bringing together HBO Max and Netflix actually will be a benefit for consumers because it can bundle those two offerings and provide them to you or I at less money. So that, it argues, is pro-consumer. We'll see what regulators think about that. That's going to be the test. And another test is how regulators define the market. Will regulators simply look at streaming services and decide that Netflix is too powerful among its rivals, which include Amazon and Apple and Paramount Plus? Or will it look more broadly at the ways people are entertained? And if that's how you define the market, you look at YouTube, which is currently far more dominant in American living rooms than even Netflix or indeed any other media company. So we'll see how it goes. But Netflix clearly must have some indication that it can get past these regulatory hurdles, or else it would not put this kind of money on the line.
Can I ask you, Don, also what you think Paramount's next move could be? I mean, if you place your bets, do you think they go hostile, Don, or no? They lick their wounds and they target another acquisition.
It's there was a lot of there were a lot of angry letters circulating yesterday before before the deal closed. It is entirely possible that we've not heard the last in this deal. But in talking with folks close to Warner Brothers, Paramount had an opportunity to increase the value of its bid. There were active discussions all the way through to the board's vote last night. Paramount did have the opportunity to outbid Netflix, but I'm told that Netflix was the top bid.
Let me ask you, Don, how much of a win you would consider this for Warner Discovery CEO David Zaslav? I mean, $27.75, that's not bad, Don.
That's a huge multiple for a business that was trading at $12 a share not all that long ago, right? It is, look, the whole sector is afflicted. You know this. The growth. This is a mature industry that needs to consolidate to remain competitive with all the other choices in our living room. So I think the bankers are pretty happy at the amount of money they managed to extract for shareholders. It was a big payday.
Last question, Don. We talked Netflix and Paramount. What about Brian Roberts and Comcast? I'm just curious, where do you think this drama all leaves them?
It's a really interesting question. I mean, as the entertainment companies grow larger, these entertainment companies are increasingly competing with tech companies for rights to sought after content like the NFL. Those deals are going to come up for renewals soon, and we'll have to look at whether or not some of these smaller media companies will have the wherewithal to compete for the most valuable content that continues to drive the most viewers and who also attract advertising. So it increasingly, this industry is dominated by large players. So we'll see if some of these other players who are not quite at the same scale will be driven to some sort of some further consolidation.
The bidding war is over. Netflix has won out over competitors Paramount and Comcast to buy the streaming and studio assets of Warner Brothers Discovery. It's a $72 billion cash and stock deal expected to close next year after the previously announced separation of its cable assets. Joining me now, Jason Bazinet, Citi Media and Entertainment Senior Analyst. And I guess the bidding war is over, at least for the streaming and movie studio part of the business. We don't entirely know what's going to happen to the rest. But, I mean, this is a surprise, Jason. I know this was not something that was your base case that was going to happen, right?
It was my lowest probability outcome, actually.
Wow.
We only had a 5% likelihood that this transaction would be consummated.
So how do you think it did then, or why do you think it did? And what about it did you not expect that maybe changed, or maybe Netflix was just thinking in a different strategic way than most people were expecting?
Well, our framework was pretty simple. I mean, we have 3 subscale streaming apps out in the marketplace: Paramount Plus, Max, and Peacock. And we just thought logically that you would see some combination of those 3 to take on Netflix, and described it as a must-have sort of combination if you really want to take on Netflix. We just put very low probability on the industry leader essentially getting bigger. But that's what this transaction says.
Does it make sense to you that Netflix is doing this?
Well, this is sort of the other conundrum. I mean, I think all media companies have always struggled with how to get operating leverage on their content spend. Meaning, how do you spend money in Poland and drive net ads in Poland and have that affect your net ads and engagement in India? It's just very difficult to do. What Netflix has long said is that they're on the hunt for intellectual property, and they're, of course, dabbling in video games. The common substrate that sits underneath those 2 disparate comments is trying to get content that can resonate globally. And that's what I think is what attracts Netflix to Warner Brothers, is they have phenomenal IP in that portfolio. And so that's the real strategic motivation, I think, for the transaction, is getting operating leverage on their content spend.
And Jason, given that, as you put it, you have these other, you have Netflix and everybody else,
right.
Or put another way, you have Netflix and these subscale operators, as you've put it. Does this help Netflix more or hurt the others more?
I don't think in a vacuum it necessarily hurts the others. I think what it does do is it just sort of widens the gulf between the winners and the subscale players. So I don't think they'll get marginally hurt, but it really diminishes their prospects to compete effectively and one day potentially become a Netflix.
Well, and specifically, what does this mean for Paramount Skydance? Because you had previously said that Paramount was the one that needed this deal the most. So how much is it set back? And is it still going to get the other assets from Warner, or the Discovery assets specifically?
Oh, yeah, well, on the latter question, I don't think anyone has real interest in the linear cable nets. What I think Paramount was trying to do is sort of give everything that Warner Brothers wanted, which was, all cash, a simple transaction where we buy all of the assets in one fell swoop. So if this Netflix transaction closes, I don't think Paramount would have any interest in the cable network assets of Warner Brothers.
So what happens to those assets? They just spin off and trade publicly?
Well, yeah, I think that's right. They'll trade publicly. It's there's sort of assets that no one really wants, that really don't have very great prospects. Everyone's just trying to get them off their income statement so it doesn't sully the story. And the question will be for those assets is, do they generate enough cash to pay down the debt to allow some residual of equity value? The street has long thought, and we've thought, that the equity value of Warner Brothers cable net business is in the low single digit level, $1, $2, $3, just because there's so much debt on those assets relative to the EBITDA multiple the street's going to pay for them.
When we're watching Netflix and this Warner Brothers deal, there have been a lot of regulatory questions already, right? You've raised some of them. So what do you think regulators are going to be looking at specifically, and are there any changes that you think they might impose to get this deal through?
I would say this, if you just looked at it through the straight sort of studio lens and you just look at the quantum of dollars that are being spent as a studio, I don't think that this transaction sort of raises any sort of issues. That would be true for any studio combination when we go through the HHI math. I think the potential issue is more on the streaming side, the largest streamer essentially getting bigger. And I think that's one reason why Netflix has said today that they're going to operate those two DTC apps sort of separately, that there will be no consolidation, if you will, at that level. And so the argument the company is going to make is that there aren't fewer apps that are out there. They will probably bundle to give consumers, a lower price if you buy both HBO Max and Netflix together. That's going to be their argument, and we'll see if it flies with the regulators.
Do you think Paramount is going to try to keep fighting on this?
I mean, there's certainly been items in the press where they referred to a plan B, where they might go directly to shareholders to make their case. So that's certainly been reported in the press. It wouldn't surprise me.
And then when this dust kind of settles here, are there other deals to be made elsewhere? What do you think sort of the next phase of consolidation might look like? Or do you think things will be quiet for a while?
Well, one of the reasons that we were recommending Warner Brothers, right, is you had an odd number of those three subscale apps. And what it meant is if one of them put themselves up for sale, and you saw a merger among those, a merger, let's say, of the three subscale apps, if two of them got together, one was the odd man out. What's sort of interesting now is you have the winner, Netflix, potentially buying one of the subscale apps, and that leaves an even number of subscale apps that are still out there. So the M&A may not be done.
Interesting. Watch this space. We'll be talking again, I'm sure, Jason. Thank you so much. Really appreciate it. Allie, this isn't quite over yet. We've been talking about this saga, this battle for Warner Brothers Discovery, a huge development this morning with Netflix agreeing to buy the movie studio as part of the business.
Yeah, and a surprise to many on Wall Street as well. One analyst from Citi had given a 60% chance that Paramount was going to win out here, but Netflix just really came out of the woodwork here and surprised with this acquisition. Now, Netflix is going to acquire the studio and streaming assets. So that includes the film and TV studios business, HBO Max. It's a deal that's valued at $72 billion plus debt. And it's one of the biggest entertainment takeovers that we've seen in recent history. And for Netflix, it's particularly important because they've historically been more of a builder than a buyer, although they did say on their third quarter earnings call that some strategic M&A could make sense for them. However, they've largely been neutral when it comes to mega deals. So I think this was a surprise to many on Wall Street. Now, here's what Netflix gained. They gain the scale and control. They're getting some of the most iconic franchises out there. That includes Harry Potter, Game of Thrones, The Sopranos, Friends, DC, and they're keeping these assets assets out of the hands of competitors like Paramount and Comcast, and those two were also in the running for this acquisition. But clearly investors, they're a bit jittery, they're a bit nervous this morning. You're seeing shares of Netflix off nearly 4% in early trading. And the reason why is a few different things. One, this deal is expensive. It's complicated. Netflix has never made a deal of this size. They're now getting involved with a legacy media competitor here. What does that mean in terms of labor costs, production costs, and also the regulatory overhang, which we know is going to continue to be an issue that Netflix will face in the near term?
Well, and there's already been some chatter about that latter part in D.C., and it was widely seen that Paramount Skydance, whose leaders are close to this administration, I think it's fair to say, that regulatorily they would have an easier time.
Yeah, David Ellison, the CEO of Paramount Skydance, he was already able to get this deal done between those two companies. And across Wall Street, Paramount clearly had the edge when it came to that regulatory approval, also due to its size. Now, in the interim, as we go through this regulatory process, Paramount and Comcast could continue to engage with WBD. And we know that Paramount sent a letter to the company accusing it of unfair practices. WBD responded saying that they are an independent board. They're doing everything in their fiduciary powers to keep this process fair. But I don't expect this fight to be over. Paramount really needed WBD. They are behind in the streaming wars, and this is a major loss for Paramount. So I think they're going to fight to the end to see if there's any sort of resolution here. And also, remember, Netflix is not going to acquire the studios and streaming side until the planned split happens, which is going to occur in summer 2026. That's at least the timeline for now. So this is still a very lengthy process, and there's going to be a few hoops that need to get jumped before we get to the finish line.